I feel like I'm at a murder mystery dinner. This is the end of a game of Clue, and we're trying to figure out who killed the real estate market in 2024. Financial confidence for your hip pocket.
Money is really just energy.
Thanks for checking out It's All Money. Welcome to It's All Money from Sonoma Wealth Advisors in a different location today with perhaps the biggest podcast episode that I've ever been a part of. I'm very, very excited about this. We are at Somo Co-work in Roanoke Park, and today we are talking about real estate. I have a co-host today. Welcome, Shelby Wirick, financial advisor. Thank you.
I'm so excited to be here, and thank you guys so much for coming. This means so much.
And we are talking about real estate in 2025 and what we expect or hope or wish or think will happen. So we're joined by some of our closest friends in the industry. So just to get you some context of who is talking in the room here, collectively, we've got 700 transactions over many years in the business and over $1 billion moved among these 6 agents alone. So let's just... Welcome. So thank you all for being here. And if you're listening to the show, I want you to start by getting a chance to meet everybody who's on the panel today. So front and center, Mary Fillinger, why don't you open up and tell me yourself, your brokerage, and a little bit about who you serve.
Yeah, I'm from Hedge Realty in Petaluma. I really love our Petaluma market, specifically in our community. So I'm very invested in the families, the schools, all that fun stuff. That said, we are licensed California Realtors, so we can go up and down the entire state.
I have to admit something here. He helped me buy my first house. Oh, no. Might be a reason why he's here. And let's hear from Miguel.
It's a favorite.
He did. Kind of got the in.
I'm Miguel Paredes, and I've been in the industry for 18 years. I knew when I was 12 years old that I wanted to be a real estate agent. Right now, I help people buy their dream homes up and down the 101, and that's me.
Very good. I'm Mary Bienek, and I'm with Sotheby's International Realty, Sonoma Valley, wine country. And we moved here from Southern California in 14, I think. And so it was a pretty tight market. I don't know how to say that without being, we just did a ton of open houses. And so we didn't know anybody. And just kind of started. And it was a little slow at first, but it, just perseverance and then using, the people that you gather along the way. So we've been here about 10 years. And my husband is my partner.
That's cool. I'm Morgan Devencenzi. I'm a co-owner of Sullivan Group Real Estate powered by eXp Realty. My business partner, hold for surprise, is my mom. We've been working together for 9 years. She was in real estate as a second career a few years before I joined her. We work up and down the 101 corridor as well. Our office is in Santa Rosa, and we serve really kind of most of Sonoma County, following where our clients send us.
My name is Kristie Eddy. I am with Sotheby's International Realty in Sonoma, as well as Mary. I love it. I grew up in the Valley, so I grew up in Kenwood. And right now, primarily, I serve a lot of second home owners. So a lot of people coming in from the Bay looking for a second property. But I love working with primary ownership as well. It's just a little less common in Sonoma, I feel like. So, and occasionally I jump outside of that little bubble of Sonoma.
Chris Meadors, Compass, Napa, Valley, and Sonoma Town. If I'm feeling froggy, I've been doing this 8 years. Also got into this to help first-time homebuyers build financial foundation and legacy, but also ended up working with kind of primarily second home and weekenders. But happy to help whoever respects my time, pays my fee, and takes my advice.
And I'll just say this.
Right there.
I'll say this up front. If you're looking for any of their contact information, it will be in the show notes. I want to start with some headlines because I'm not the only one who can read news articles. And I want to talk about last year. I want to go back in time first and talk about last year. And I want to talk about things that I read, including New York Times, December 2024. Can the U.S. climb out of its unprecedented housing crisis? Just this week, National Association of Realtors chief economist revised his 2025 home sales increase from 9% down to 6%. September 2024. Fewer homes have changed hands this year than at any point during the last 3 decades. And the one that really cued me, February 2025, National Association of Realtors reports pending home sales in January hit an all-time low. And I said, okay, we got to do an episode on this. So certainly no one in this room had a bad 2024. We all did great. But maybe some people that you know, can we describe 2024 in maybe a couple of words? Mary, I'll start with you.
I think it was definitely a different year, but I don't think that you can call it a bad year across the board. I mean, things were not as high and as crazy as 2020, 2021, and the beginning of 2022. But we were all still doing business and we were all still making things happen for our clients. So, of course, it's disheartening. We hear, we see all those articles. You turn on the news in the morning and you're like, and it says, real estate halted.
Your industry so
yeah, it's just, and
we get it too.
Yeah.
We get it too.
Yeah, and it wasn't the case, but yes, was everything as crazy as it was in 2021? No, but that was such a bizarre unicorn that was happening at that time anyway. So it's hard to compare. But yeah, I mean, so things weren't as heavy as they were back in 2021.
Kristie, what would you say? What do you remember from 2024?
I think it was a recalibration year for a lot of people.
Mm-hmm.
So the market, not only did our sellers have to level set their expectations, they really did, on what they could push for their high numbers, but our buyers had to be a little more mindful as well. So I think we all took a moment and a pause and kind of the sellers and buyers that we were working with who were willing to adapt to, hey, we are out of COVID, man. You're not going to get the same number for your house you think it's worth, or like you love your house so much, So as soon as we were kind of all recalibrating, I thought, in general, it was a pretty successful year. The other thing was, I think the pivoting of market and waiting for multiples was really shifting away. So now
market and waiting for multiples. For someone who doesn't know what that is, what is that?
So I think, to just put a house on the market immediately, just jump right on market with it and hope that you're going to draw a lot of eyes and attention onto the property and multiple people offer. I think that strategy in 2024 started to sink. So that was strong and alive and well to underprice a little bit in previous COVID years. And then, boom, we were used to this huge influx of buyers. Whereas in 2024, I think being a little more strategic on the number you launch a property at or looking at off market as a strategy. Does that answer your question?
It does, yeah. And I want to stick on this point for a second because you've both touched on it. Miguel, can you tell me, during the COVID years, some of the things that you saw in real estate which were not normal?
COVID years was insane. and because of the interest rate. So, I mean, average interest rate for the last 50 years is 7.7%. That's the average. If you average that out 5 decades, that's what you have. Our government decided to drop the interest rate, which was great. So it was like 6.5%, 6%, 5%. And you started seeing at 5, 4.5, people were moving, people were buying properties, people were sending multiple offers. And then like, oh, well, it's going, let's drop it even more. So they kept dropping the rates to like under 3%. And so that created the frenzy because now you have free money. So now the house that you could buy that you were looking at, now it costs you $1,000 less a month to purchase it. That's what created the frenzy. That's what created the multiple offers. That's what created like anything you put on the market is just sizzling and goes off and went away. 2024, actually 2023, that's when the rates started going up. And so we had clients approved with low rates, 3.75%, 4%. Like, hey, sorry, your rate is at 5 a month later. Sorry, your rate's at 6. Hey, your rate's at 6 and 6.75. So the market, our our inventory dropped to half of what our average was.
Because people are saying, I'm not selling.
we're not
Prices
selling.
are coming down, right?
They're keeping the low interest rates. Who would, in their right mind, would sell their home with such a low interest rate? Like, you're going to lose a lot of money to move. So that's what I saw. So the 2024 question is more, why was it a good year, bad year? It's like, it was a pretty bad year. I think for the housing industry, you had half the many sales going on. So how could that be good? Half of your inventory went away. And because no one wants to really sell their houses, people still wanted to buy. And I felt that people were a lot more pickier. So buyers were a lot more pickier in purchasing a home. Like, hey, I'm paying a premium. I want something that's done up. And that's what I've seen.
Morgan, same question. Was there a moment during the COVID years where you had maybe 19 offers? Was there a COVID moment where you were just like, this is whack?
Bananas. Absolutely bananas is kind of how I describe it. And it was a unicorn year, Mary. I think you actually just said that. And that's how I describe it to my clients, that if you were in the market at that time, it was a unicorn moment and it was really special. And if you got in with one of those low interest rates, it was going to benefit you for years to come. But where we are now, kind of coming out of that, is exactly that we had kind of a couple years in between now and 2021, if that, where that reality of realistic, normal interest rates kind of hindered buyers. Sellers were holding on to their homes, and we weren't seeing 34 offers on one listing.
Did you really get? You had 34?
30. Yeah. 29, 32, and 34 were the highest that I had to deal with, and it was terrifying. I had one set of buyers that I wrote 15 offers for one set of buyers.
Were they the nicest people too?
They were.
They're just the best.
They are like some of
Always
my favorite
is.
friends. I actually talked to her today. I talked to the wife today. Like, she's the best. I mean, what a bonding experience. We laughed, we cried, we drank wine, the whole thing. Like, I mean, it was an experience. But that's what it was like in the COVID market with a buyer or a seller. I mean, it was just something you can't really describe in this market. You know, it's just not the same experience. And coming into 2024, I actually heard a quote, and I wish I could give someone credit because I can't remember who said it, but they used the term that the 2024 market, as we are coming into 2024, get ready because it's going to be a skill-based market. And I think that really resonated with me and my team of, okay, yeah, the market has changed. We're no longer in the pandemic coming into 2024 and now into 2025. We need to sharpen our skills a little bit more. We need to be better prepared for our clients to better serve them, because it's going to be harder to put these deals together because money is not as cheap and free flowing.
Are you seeing a difference? I just vividly remember so many realtor friends of mine saying, hey, people are coming in with all cash offers during that time. Are you seeing a difference, now from then? Like, is it still kind of the same scenario, or does it just more so depend on the clientele?
Chris, why don't you take that one?
Yeah, drastic difference. And I can also answer the COVID question. I saw a lot of really, really heavy lifestyle decisions being made, poor financial decisions, right? We've all probably had to help someone who either got relocated back to the city for work or just didn't like where they moved, and help them sell their house, mostly at a loss because they overpaid. That's been really hard to navigate with folks. As to cash versus finance buyers, yeah, I've seen cash buyers are still there for sure. There's still a lot of money in the Bay Area. Those buyers, in my opinion, are a lot more selective and hesitant right now. Second home buyers need stability in their lives and their stock portfolios, confidence in their startups to make significant purchases. A lot of them are on the sidelines. I've also seen a lot of contingent on sale deals. I did 3 last year, which was, you couldn't do one for the last.
For someone who doesn't know, for listening, who doesn't know what that is.
I have to sell a house before I buy a house, which is shockingly pretty common. Most people can't buy a house without the equity from their current home.
Right.
So that was really interesting to watch the realtors sort of very slowly absorb those types of offers and have to explain it to sellers and say, this is actually quite a normal process. And once we got through that, we were able to be pretty successful. A lot of buyers were able to be successful that way. So yes and no to your question.
Thanks. Just curious.
I wanted to say 2024 brought us changes to our industry too. With all the buyer, they decoupled the sellers and the buyers' emissions. And so
That was
I don't know if
later
that's
on my
one of your
question. It
questions.
is.
Yeah.
Can we, that is my,
Yeah.
like, I'll get to it right now. What's with the commission thing? I don't know what this is. And then it's like, boom, a big thing, a big change, so who wants to jump in? Mary, you want to jump in on that? You want to
Just what I know of it. I mean, what I've, it's changed the way we have to, the mechanics of our business. But in my head, the buyer is the only one that ever brought money to the table. Ever, right? So the buyer has always paid the commission. It was built into the price. I mean, that's kind of the way you look at it. So when you're doing a net sheet for your seller, and you look at that chunk comes out. I mean, it's on their side. It's been like that for 100 years. So I don't know, someone in the East Coast, I guess, decided that they had been forced to pay the seller. Do you want to hear this part?
I want to know exactly what. So how was it? We were talking. The issue at hand and the litigation that changed things is that
How did it used to be?
how did it used to be?
Yeah.
They set the commission.
Yeah, moreover, when you sign a
Right.
listing agreement
Correct.
with a seller, you are covering the entire commission for both the buyer and the seller.
Right.
That's how it used to be.
Okay.
It's no longer like that. So you would sit down with your seller and say, I'm going to do this. I'm making up a round number for 6%. I'm going to give the buyer's agent 2.5 or 3%, and I'm going to keep 2.5 or 3%, or however that shakes out. But that would be decided between the seller and the seller's agent. And then you would bring that house to market and the buyer's agent.
And that's how it was.
That's how it was.
Now, how is it?
Now,
So it's basically
it's really not that different, honestly.
It's basically this. Here. You go all the way around
Yeah.
to the same thing, and we start it over.
Yeah.
So that's all it is. So now,
Right.
basically, the lawsuit was the buyer wasn't allowed to pick their commission. So now the buyer has to sign an agreement before looking at any properties. It's limited to 3 months. So you have to sign an agreement.
Oh my gosh.
So if you want to see a house with me, you got to sign an agreement, and then we're going to negotiate what percentage you're going to pay me, and you're going to pay me a premium. No, I'm just kidding. but you're going to pay, and then you write the offer, and then it's the same thing over again. Then you tell the seller, hey, we're supposed to pay our agent 3% or 2.5%, and we want you to pay it out of what we offer you.
So you negotiate.
So just basically just
So
Negotiate with your buyer's agent ahead of time?
yes.
So essentially now when you go to sign a listing agreement, the seller's agent will go and say, I'm now going to charge you, instead of the 6%, I'm going to charge you the 3%. But please keep in mind that when we go to sell this property, the buyer's agent is likely going to write their commission into the sale price as well. So it's still all the same is the point. We're just using more paperwork.
And so I think it's helped the buyer's agent a lot. Because in the past, if someone could call up a buyer's agent online, look you up and say, hey, show me these properties. And you're like, yeah, okay, you show them. And then they're like, sorry, we're going to use someone else. We're going to use a listing agent to purchase a home. Now, because it's a contract, if the buyer decides to buy it with the other real estate agent, the buyer's liable to pay their buyer's agent. So it's actually it was a whole thing all over in the news. Like, this is awful. This is crazy. And it actually made it almost kind of worse for the buyers, because before they could actually cheat an agent and not pay them and make them drive them around
Well, that's what
for hours and hours.
when working with clients, has this impacted you by having to have all these disclosures that you didn't have to have before up front?
Kristie?
A little bit, but I do think this, there was a huge flurry around this when the news hit, and it really did simmer. So while there are some additional conversations we have and explanations we've had to have, we work with, I find I work with a lot of people who are happy to pay for exactly the service they're getting. So it's like anything. I mean, if you really want to stay off death row, you're going to get the best lawyer and pay premium,
Oh my God.
But if you're okay, you may be making it.
Is that the analogy you use with your clients?
So, it's one of those things where I think there was a huge flurry, and it really did simmer, exactly to Miguel's point. I mean, there is additional paperwork, there is more explanation, but people are paying for a service. They respect that. And if anything, it's created some nice conversation with buyers and sellers. Hey, this is what we do. This is why we're commanding a service or a premium in some cases if you're charging a little bit more. I think it's been a good thing for the industry and not as impactful or scary as maybe the news loved to say it was.
Say
in
back to
August.
the headlines.
Yeah.
Wait, I do remember listening to it, and I was like, man, buyer broker agreement has always existed.
Yeah.
I've never used that
Yeah.
because, like, I'm not going to bind someone to work with me. If they don't want to work with me, they don't have to. But now it's like, oh, I guess we have to do it now. So it's a lot easier. It's like, well, this is the next step if you want to see this house.
A lot of this was based on the ethics portion of it. And a lot of where the transparency got very blurred was for a very long time, because all the commission was figured out up front, buyers agents were running around saying, guess what, buyers? I work for free. You don't have to pay me. Well, guess who's financing 100% of the purchase? That pays the agents and the seller.
Right.
And it started to get really muddy. And then if a home was listed for a 1% buyer commission versus a 2.5% buyer commission, which is, it's all negotiable. I'm supposed to say that. But 2.5 is generally kind of more norm. People would maybe not move to show the 1% buyer commission home, which then is steering the market. So there was a lot of transparency issues around how the commissions were split between the buyer and the buyer's agent and the seller's agent, and ethically what was being explained to those clients along the way. And that's what it landed in a beautiful lawsuit and these changes. And I totally agree. I think, honestly, the conversations have only been better since August 17th, 2024.
That's great.
But who's counting? She's counting in her mind.
At 12:59.
Chris, did you have something you want to say?
I would only add a small pro tip to the consumers out there. If they're looking at comping their house, I would make sure their realtor, when they run the comps, learns whether or not and how much commission was included in said purchase. It's within a 2 to 4% margin of error, but $20,000 to $30,000 could not have been included in a purchase. So a comp down the street may not be totally apples to apples with.
That's a really good point.
That's a really good point.
It's actually a really scary, and especially from that August to now time period. We had a cash buyer who bought a place in Santa Rosa, and they had the money to pay the commissions out of escrow.
Because it benefits the buyer, right?
It benefits the buyer tremendously because they're not paying that as part of their sale. And so property taxes aren't included in it. It's really beautiful. It's a legal way around it. But the neighbor was selling their house 3 months later, and there was a $130,000 cut on it looked like, because they paid that $130,000 to both out of it and out of that commission, and it was, or out of escrow, and it can be really dicey. So you really need a realtor who's going to do their homework.
Advocate.
Absolutely, to figure out what the real price is.
Interesting.
It's a real miss for the consumer, actually. They lost really good data in that whole exchange.
They did.
I think so too.
Let's talk about interest rates. Let's keep it positive. Mary,
Going down a rabbit
yeah, I'm going to get it all out of the way first.
I promise, guys, this will get better.
Poll of the room, just give me a number. What's the most jacked up, crooked, disgusting, high interest rate that you've seen recently?
Let's go. Should we start?
And who wants to say something?
You mean like a client that purchased something and they just had a terrible interest rate?
I mean, you just see the interest rate, you go, oh, God. It's 2024.
I mean, just to give some personal perspective, we were talking about this a second ago. I bought a house. My husband and I bought a house in 2021. We got a 2.875% interest rate. And we were like, we're never moving, ever. And we gutted it and renovated it for our family. We had an extra child during this time. And we were like, oh, if we could use some more space. So we bought a house at the end of last year. So I actually had 2 transactions in my personal inventory in 2024. So I don't think it was that bad of a year. And we went up to a 7-something% interest rate. But it was a pill we were willing to swallow because it made sense for our family.
Mm-hmm.
And the interest rate can go down. What you can't have go down is the purchase price. So the purchase price was phenomenal in that moment. The house had been on for a lot more the year before and didn't sell. And so we got a really good deal in this house. And if it takes us even a year or two, we're still going to be under for all the money that goes out on the interest rate because of the price we paid.
Anybody else interest rate that shock them? Anything?
I didn't have any 8s. Did you have any 8s?
Eddy?
I had a couple 8s of clients that closed. A few of them were relocation, and they were coming in for jobs, and they had families, and they had school transfers, and like there was this whole network of a web that they had figured out. And then interest rates. This was what, the end of 2022? Was that the timing? Yeah,
When it started.
Yeah, so it was the end of 2022. It was like November or so, and I was like, I don't know what to do. Like, I mean, there's nothing I can do. What am I going to do? Call the president? But it was just like, and they were so panicked. But really all it came down to was, does this make sense for your family? So Mary, just like you, that's where I think a lot of the moves currently is, does this make sense for your lifestyle, for your family, for your future goals? Given the interest rates, and does it make sense financially? Then most people are still making those moves. So yeah, I had 2 like 8.25-ish in there, and both of them have refinanced. And I mean, comparatively, their mortgage payment is like a dream.
Yeah.
8.25 now, they're like in the high 6s. So they're like, we're living large.
We're signing up for Netflix now.
Seriously, and Hulu. I mean, but seriously, that was kind of what was happening there, is people were, putting on the brakes, but if they had to make a move and they had to put a roof over their family's head, they knew that 8.25 interest rate was better than 100% of renting.
Yeah, that's right.
I have a really high one, 10.25.
Yeah.
Whoa.
Yeah, it was my personal one as a realtor,
Money or something?
but it was for a flip. So I did it.
yeah.
I did it to make money out of it, and so I don't really care about rates in the real estate market. It's about what you're paying in rent. So if you're paying a high rent, you have to look at what your monthly payment's going to be, and that's how you really decide if it's high or low. It's like I paid 10.25 and I made a big profit. She paid higher interest rate from a lower rate because she wanted a bigger home. So rates don't really matter. What matters is what you're paying monthly. And as rates go up and down, something that continues to go up are rents. Rents. If you look at what you were paying 10 years ago, what you were paying 5 years ago, what you were paying 3 years ago. If you multiply whatever you were paying to how many years you're renting, you're going to see a big number. And that's all the money that you've been kind of letting go.
Yeah.
100% interest rate when you rent. When you purchase, you build equity.
And I'll say this to the camera. Especially if you're a first-time home buyer, if you are able to do that, and not everyone is, it might be the guy in the relationship, or one of the people in the relationship starts getting like intoxicated with the market aspect of the investment aspect of the my neighbor this and that and the rates and the cuts and the this and the, like you get suddenly like in a market mind, and it's like, hey, can you afford the payment? Do you like the house? Those two first, and don't get pissed that your neighbor got their house on a short sale for $100,000 less than you. My neighbor, for real. Let that go. What about right now? Just a tip from an old guy. A little bitter. Yeah, never. I don't hold on to that.
It is though important to like acknowledge, not for the first time home buyer, but for the move up buyer.
Yeah.
And that's why there are so much fewer transactions, right? Like you really have to need an extra bedroom to justify the rate increase.
We actually went down a bedroom. We actually went down a bedroom.
Wait, up a kid.
Up a kid, down a bedroom. But
That makes total sense.
but it really did make long-term sense. And so that's what I do feel like when buyers really do start to understand that getting a home that they want at a price that they can afford with an interest rate that they can at least afford in the short term. And short term might be a couple of years. You got to be able to hold on.
Yep.
Unfortunately, there was a lot of talk in the past couple of years, like, don't worry, interest rates are going to drop.
I should probably finally kind of stop saying
man,
that.
Yeah.
It
That's
was
the thing I noticed.
so
like,
terrible.
in
We
the fall
heard
of last
so
year.
many people saying to clients, mortgage people, and just, don't worry, interest rates are going to come way down. Like, stop. You should just imagine that the mortgage you have is what you're going to have to pay. And if you can't afford it, you should not buy the house.
Right.
So we've all seen people get in trouble with that. So
I love that. If you can't afford it, don't buy the house.
yeah, real simple.
Yep.
Real simple.
I kind of wanted to segue because Miguel had mentioned flipping houses, and I know Kristie has had some clients too. I'll start with you, Miguel. Are you seeing a trend in that still? Because that was kind of a thing, I would say, a couple of years ago. But are you seeing that now with the current state of the market?
I actually see a lot less. That's why I'm doing it. 'Cause it's like there's less.
You're doing it yourself
Yes,
on the
I have
side
a
from your
company
business.
that does that, and
Yeah.
I purchase it myself with my company and do it. So there's a lot less flips. That's why I'm doing it. So
Okay.
right now, supply and demand. Typically, when you have low supply, you have high demand, and we do not have that in our market. I see a lot of people that are a lot pickier at what they're buying, and I believe it's because they're paying a premium. So,
Kristie, what do you think? Are you in the same boat with your clientele?
I think so. I personally got into real estate because I started investing in long-term hold property. And then I thought my agent was so terrible. I got my license. And that was the most humbling thing I've yet to do in my life. Was like, oh my God, this job is actually
Shots
hard.
fired.
I was like, oh, I
Man.
can do this myself. No, this is hard. So I love the investment aspect. I've flipped some myself. I think the environment right now, lots of opportunity for buy hold. So I love markets like this because I'm like,
wait, hold on. What's buy hold?
so buy hold is buying an investment property, and then you don't have a plan to sell it. You're going to add value to the property and you're going to hold it for an extended period of time. In my opinion, that's north of 7 years, let's say. Your plan is to continue to hold the property and just long-term rent it. I think there's a lot of opportunity in that space right now because, as Miguel kind of is alluding to as well, when there's uncertainty in the market, when people aren't flipping, when people aren't investing, there's opportunity because there's always a deal to be had in every single market, and your competition pool has just gone way down because they're sitting back, uncertain. So now I think is a nice time to lean into some of the areas for investment opportunity on buy hold. Fixed, to flip right now, I'm less bullish on that. So go, Miguel.
Yeah.
I'm a little less bullish because cost of money and uncertainty on exit. So since it's a short-term game, all fix and flips are going to be a short-term game, I feel much more bullish on the long run. So I'll do a long game right now. But the shorter term, boy, you better be real dialed in or have a company to do it because my cost basis for hard money right now or some of these things are just going to be a little higher. So
It's good to have different insights. Thank you.
What about institutional buyers? That was a big fear past couple of years. Unnamed massive financial company wants you to own nothing and they're going to buy up all the houses and you will rent from them forever. Have you seen that in the market? If you have, is it still happening? Is that still a trend? And anyone who wants to speak to that, Chris, looks like you have a
I guess because that I do quite a bit of business in the Southeast. I'm from Tennessee. They still are very active and very much in those markets. Not as much in these markets because the prices are too high. The prices versus
That's right.
don't work out.
That's why.
Yeah,
That's why we did that.
Also not a very landlord-friendly state, California.
Right.
So, to my understanding, they're still pretty active in the South.
Yeah, they're not really active here in California.
Mary, what about Texas?
Texas.
You were an agent in Texas before
I was.
Sonoma.
I said we moved from Southern California, but we were just there 3 years, and we moved from Texas to Southern Cal. But we see that a lot. They buy in, and I've never done it, but it's kind of a bulk sale. There's some really inexpensive properties that need some work. You need to be rehabbed.
We've talked about it a little bit already, but Morgan, why is now a great time to buy? Because we've talked about bad headlines. We've talked about things, the impression people have. Yeah. It doesn't feel like there's a wave going to the moon. I don't want to do that. And we see that in all the time on our side of the business as a wealth advisor. Why is now a great time to buy?
Absolutely. I think Mary touched on it already. I was also in the same boat towards the end of 2024. My husband and I bought a new house as well. And what we were able to negotiate on that sale and what we've been able to do for our clients in the last, I would say, 12 or so months has been leaps and bounds better than what we saw in 2020, 2021. Even 2019, before the pandemic even hit, was still a pretty competitive market. So it's been years since, I'm not going to say we're in a balanced market where we have equal buyers and sellers. We still do have a little more seller market leaning, but buyers have a lot more negotiability. They aren't up against multiple offers, which means they aren't paying over and above the true market value of a property. They're able to negotiate better timelines. What was stated before about those contingent sales, when a homeowner needs to move to their next property, maybe they need to downsize, they can't do the stairs anymore, or they want to get the kids into a different school district, so they want to move before they start getting into school, whatever those usually lifestyle needs are for those contingent sales, they're able to coordinate those timelines. And that wasn't happening before. We've had so many contingent sales in the last year and a half because people see the opportunity. The biggest fear when the market was so much busier during the pandemic was, great, I can sell my house for a wicked price, but where am I going to live?
Right.
Yeah. Where am I going to find another property?
Sell high, buy high.
So, sell high, buy high, exactly. So people were holding on to their homes during the pandemic in fear of not being able to find a replacement home. And now we have, a different batch of clients nowadays holding on to their pandemic purchased properties because they have a low interest rate. But there's always going to be that turnover. And I feel like this market allows those buyers, specifically speaking to the buyer sector of the market, those buyers a lot more opportunity to get the right house and the right price and the right condition.
It's hard. It's really hard. We see it again on the investment side. It's really hard to be the contrarian. And I take it back to, I looked up these numbers. I have it's data and stats. Median home price in Sonoma County in 2005, $619,000. In 2008, $382,000. Pretty big haircut. And I remember at that time, I'll never. I'm upside down, right? And it's just never. 2025, median home price, $800,000. So if you have the guts in 2008 to lay it down and get that house, it's worth a lot more today. And now is not 2008, but prices have at least chill. We got a little chill vibe session going on for prices. You're going to wish in 2 years. Well, let's say you could be wishing in 2 years.
Disclosure.
Yeah, I can't say you're gonna. That you had, thought about it right now. At least to poked around. Am I wrong?
Oh, no.
What's the phrase? What's the best day to plant a tree? Well, 30 years ago.
Right.
Like, what's the second best day? Today.
Yeah.
Yeah. If you can afford it.
Yeah, but I do
afford
think I've had several buyers walk before, writing that final offer because they panicked about the interest rate.
Mm-hmm.
And I know some of them are regretting it because then they saw what the house actually ended up selling for.
Mm-hmm.
And thinking they weren't going to be able to get it for the price they wanted. And, that's a bummer because from a financial perspective, that is a loss to their financial investment. So I think all of our biggest hopes, if buyers can actually afford the monthly payment, just do it.
Mm-hmm.
Just do it because you are only going to regret walking away from something like that. And you can't get that back. I mean, if for some reason interest rates do come down, and I don't know when that's going to happen, it's just going to go up, right? You're going to have way more buyers to compete with, which is going to be a whole nother animal that you don't want to get in the market with. The prices are going to start to drive up and the time will have passed. And we don't know when that time's going to happen. So you got to just take the risk if you're able to.
And that drop in numbers that you shared was when the market crashed.
Yeah, it was
and that was because the loans, you had adjustable loans that a lot of people got loans and lost their homes because of it. And that's why we saw the big crash. And that wasn't a typical thing that happens. And so now it's fixed and we got higher rates. But as far as when is the best time to buy, it's when it's the best time for you to buy.
Mm-hmm.
If you're ever thinking of actually owning a home, actually being part of the American dream of building equity, you have to buy. If you're renting, you're building equity for your landlord. And you're building their American dream. So you plant a tree 30 years ago, 15 years ago, today, you have to start. If you never start, there's never going to be a perfect time.
Mm-hmm.
I've had the markets where it was crazy, where you said the numbers of houses were so low. I remember talking to people like, hey, look, this condo just sold for $195 and this house is selling for $215. This is an incredible price. I'm just going to wait for the prices to go down even more. But the rates are like at 4. It's really
historic lows, historic crash.
Those houses are in the 900,000.
This is the time.
And so there's always going to be like, no. If you're thinking of buying a house, talk to someone that owns a house. Don't talk to someone else that rents. So like, and I tell my clients that have kids, I was like, hey, would you take advice from someone that doesn't have any kids to give you advice on your own kids?
I like that.
Like, no. So get advice from the people that actually own property that's had it for years. And I don't think they'll ever tell you not to buy.
So I have a question. Chris, I'm going to ask you. So on our end of things, when we do financial planning and we put together a plan for a client, we'll, if we're putting in, their full financial picture, their net worth, assets meaning investments, and then, the value of their home, a lot of times we'll use Redfin or Zillow. And I go back and forth between the two, depending on what I find, but would you say that that's an accurate assessment of a house's or a home's value?
I would not.
Good answer.
Scene. End of video.
Or the time spent, it is sure a back of the napkin within 15 to 20%, fine.
Mm-hmm.
Yeah, but if you actually need to do real math and make real life decisions, I would highly recommend you consult a qualified real estate attorney or lawyer or real.
Really?
We hate Zillow. Zillow's the worst.
Why is it? But why is it the worst?
In the Bay Area, especially, Zillow works great in Henderson, Nevada, in Plano, Texas, where there are 400 homes that are built by the same person the same year, right? Where the comps can be done by a computer. In the Bay, there are nuances that computers cannot yet solve for. So, good for back
If
then.
you're looking at more of a cookie cutter home, you're probably in a smaller range of being more accurate, maybe 5 or 10%. If you're a real 3-bed, 2-bath, you're surrounded by also 3-bed, 2 baths, basically the same thing. As soon as you start getting,
even then,
we're Sonoma County, we're Napa County. We got a lot of rural property. You can't zestimate that.
Yeah.
Well, and so what's the problem for someone who has a misconception based on Zillow? What does that cause for you as a realtor? What issue does that cause?
At true value of a home. Really looking at that Zestimate or the Realtor.com estimate or whatever site you're looking at, they all try to spit those out. And they are, I'll just say it, they're in the market to take our clients.
I'd love to take a shot. Zillow.
Yeah, absolutely. Let's just do it. Really what these sites do is they actually pull the information from the MLS, all of us hardworking realtors.
Tax records, not MLS.
Well, tax records. Okay. Tax records, and put that information on their sites. And then the consumer gets to go on those sites and flip through the pretty photos and look at the mortgage estimator calculator. And they're like, ooh, maybe, possibly, I kind of like it. Let's click the button for more information. Well, that gets spun to a network of agents that pay for said leads. Sorry if anybody in here is doing that. It just is one of the ways to try to get clients. And Zillow and Realtor.com have a large fee to be in that network of agents. So I've found personally, when I've done some pretty good research, that a lot of these estimates are consumer benefiting and not accurate to the market or what us agents are going to walk into. So we have to then furthermore educate our homeowners who are looking at this estimate, like, why is it saying my house is worth this? And then educate buyers of, yep, that's what they decided to say, but they are not local here. They don't actually know this market. So it's a very weird dynamic to constantly, and clients on every level of the spectrum look at those numbers.
I was curious because a lot of times we'll ask clients like, oh, okay, have you had, they say, okay, this number doesn't seem right. Okay, have you done any remodel projects? Give an estimate of what you think that's about. And obviously, if you want to go get an appraisal, go do that. But just curious from your end of this, when you guys are looking at comps, and I'm sure you have clients that will go to Zillow or Redfin or what have you. And, I'm sure that's probably the first thing that they would look at, right?
Right.
Yeah, that they typically do. So I ask them what they think their house is worth and where they got that information from. But Zillow is basically a ballpark. And it's a ballpark, like a little league ballpark compared to a major league ballpark, and they're trying to compare them the same. And just to give you an example, the CEO of Zillow sold this home for $1 million less than those estimate.
I was looking off camera and I heard half of that and I looked right at you as you finished it. That's an LOL.
Yeah. So CEO's estimate $1 million less.
Wow.
Let's say you have an earache and you look on WebMD and it says, could be an ear canal. You could have some fluid in there. You may have an infection. It's the difference between going with that diagnosis and going to an ENT.
So it's fine. I get it.
It's like-
a lot of the clients like, oh, Zillow said it, Redfin said it. I'm like, great. Well, here are the comps. And here's what's
Right.
sold in the last 6 months. And
Right.
this is where we're going to base it off of and kind of give them a real picture of what's actually going on.
Next question. Do first-time home buyers still exist in the North Bay, and are they all 59 years old? Mary.
They absolutely still exist, and they're not all 59 years old, although they can absolutely be 59 years old if they want to be. I think that what's been really amazing about these past couple of years is that mortgage companies, lenders have really been able to get creative for home buyers. It used to just be a solid, you have to have 20% down. And that's so intimidating for first-time home buyers. That's not necessarily true today, or it doesn't have to be true given the circumstances. And I that's like the one thing I wish we could just shout from the rooftops, because first-time home buyers deserve to know that they are just as entitled to come buy a home as anyone else. They just have to work with a good lender and a great realtor who'll get them a good deal, but a great lender who can get them a mortgage that they can afford. Sometimes, in some cases, you can do 0% down. You can do 2%, 5%. It can vary, but I think people just think, I'll never be able to afford that. I don't have 20% of $700,000 or $860,000. It's not true.
Yeah, there's a lot of programs out there for first-time home buyers. There's even programs they'll help pay the down payment as well.
Right.
So, but
Right.
but there's definitely there are older people, first-time home buyers, and the youngers as well. So
I think it's a national number, but they actually just put out that the first-time home buyer age right now is 36 years old.
Yeah.
That's not old and that's not young. You know, I mean, I think that's normal. Considering, people aren't having babies usually as early. I mean, we got careers, we got to get up and going. And I mean, I had a first-time home buyer that was 79 years old, and he laughed at me because the mortgage lender gave him a 30-year mortgage. I'm not kidding.
That's a great guy.
He goes, "This is a joke, right?" And I was
That's
like,
great.
"Just sign the paperwork. They know how old you are." So, there's people all over the place. But being able to find the right lens is not fun. I know. He was hilarious.
We have certainly, though, all been around people. I don't know, you're at a restaurant or you're at a family party or a dinner who will say, I wish I could buy a house.
Yeah.
I'll never be able to buy a house.
Yeah.
And you're like, what? No, absolutely you can buy a house. I mean, it may take a couple of years for you to focus on what you need to do to get your financial life in order, but it is absolutely doable by anyone.
I think, real estate's no exception to investment of any sort where time is on your side. So jumping in as soon as you can at whatever level you can, especially in this state, we're in California, we're in Sonoma County. This is a very desirable area with some natural, we've got the coast. So we're not in, Austin, Texas. Or
You don't have to call anybody out.
we're not in some areas that can continue to expand. So I steer away from some areas like investments such as Las Vegas because we can continue to build out. And in where we are, this isn't the case. So, the sooner you jump in, you create an ability for a step up. But there is no step up if you didn't start somewhere. So I think it's valuable, and I want to teach this to my own children. Buy something at some point very early as you can, so that you create some opportunity. And working with you all, I'm selling things, I'm moving up, I'm trading, I'm making moves. But it's because I got in a while back. So I think it's powerful for people. It's a tool.
It's hard to walk into someone's office, a professional's office, when you've never been involved in that industry. And there's a fear, you would not walk into the Lamborghini dealership knowing you couldn't really buy one, and there'd be like a really awkward, like, oh, why am I here? Like, I'm broke, So I think that there's a major fear about doing the same thing with a realtor and doing the same thing with a mortgage person. Everybody just wants to have that windfall where they walk in and they can just sign a check. Everybody wants to do that. I want to do that. Very few people can do that. If you can do it, God bless you. If you can't do that, it's exactly what you're talking about, which is there are so many professionals, especially right now, who are going to be more committed to you than ever. Yeah. And there are programs that are annoying, and there's paperwork, and you got to go through, and it's not every single thing that you wanted in the house, et cetera, et cetera, et cetera. But there's a way. There is a way. It's not always a straight path. But if you're going to be a good client, then you're going to get good service, I would suspect.
So.
Yeah. All right, let's close out. Speaking of what you can do for clients, I'd like to hear from each of you a moment where you were proud of work that you did for a family, that you were proud of work that you did for a client, where you really felt like, wow, if I wasn't here, they wouldn't have gotten this. And who wants to go first? Chris.
I'll lead away. I worked with a set of buyers that were moving to Napa from San Jose pre-COVID, right? They had family there. They wanted to buy a bigger house and like grow their growing family, get a yard, stuff like that. We shopped for several months. And I finally learned what they wanted really well. And on, let's call it April 12th, COVID was kind of pretty early, but pretty serious at that point. I learned of an off-market property that was coming on that was absolutely perfect. This was kind of, we had already been locked down and told to go back home. And I videoed it for them and told them, guys, this is the one, you have to buy it. And they wrote the offer.
Quite the pitch.
Yeah, we have to,
you have to buy this.
This is the one. Wrote the offer without seeing it because they trusted me because I'd seen 25 houses with them.
Right.
The world shut down the next day. Yeah. April 15th, I think, or maybe I'm getting my dates wrong. But they ended up like being able to close and move to Napa in early stages of COVID. And I was really happy that they listened to me and they're still there 2 kids later and really, really happy.
That's amazing.
That's awesome.
That's right.
Mary, what about you?
Recently we had some people from Petaluma who had raised their families. They were pushing 80. He was, and was not in great health. And they had a big house that they 4 bedrooms, bathrooms. It was dated. And they had already asked someone to represent them there. So we met them at an open house at one of our listings. And, so they did not have their house on the market yet. But there were a lot of moving parts for them, as often with senior situations where they have either inherited stuff from a family member that passed and their garage is up to here. They've just got stuff. Nobody wants it. Beautiful furniture. Nobody wants. So it's just heartbreaking. And sometimes, so getting them over that hump of letting go of some of that. And anyway, so we found them something when their timing was right. We did a contingent offer that didn't go through, 2. And because they hadn't sold their house, and finally it sold, and immediately found one that I drive past them all the time. Yeah, so it's good. Yeah.
Morgan.
Sure. So kind of talking about how 2024 gave a different benefit to clients. I had an awesome family that was referred to me, and it was a blended family situation. They each had a handful of kids from previous relationships, and they each owned their own home, and they were bouncing between the 2 homes because they were told by so many agents and so many lenders over their time, the last couple of years, that it was going to be impossible to sell both of those homes and find the home that they wanted and be able to coordinate all the timeline, because they had to use all the equity in the 2 homes that they had to buy a home big enough in the area they wanted to accommodate them. And now they're very large, combined, beautiful family. I stepped in and I'm like, wait, what? Challenge accepted. So, being able to put a plan in place, talk them through what we needed to have in place financially for them to be ready to act when the right home hit the market to purchase. Moved everybody into one of the houses. It was a little cozy, but it worked. Got the first house, really cleaned up, staged, did the whole thing. So it did sell even in 2024 pretty darn quick. Great price, and immediately turned around and listed the other home while those 2 homes were in contract, found the replacement property. It was just beautiful. And I mean, it's one of those things that there's a lot of agents out there that I think are used to convenient sales. So when they see a situation like this, I mean, I'm a realtor and I do this for a living to make money as well as benefit people's lives. But that was 3 sales. And
That's
how
a
did these
lot of
other
work.
it was a lot of work. But how did
Were you
these other
stressed?
agents really sit back and be like, oh, I'm not touching that? That blows my mind.
Yeah, in 2024.
And they were wonderful in 2024, which, okay, a fun little tidbit. I know we're in like happy story things, but NAR put out that 74% of agents in 2024 did not close one deal.
Oh.
So congratulations, everybody. Isn't that insane?
You survived.
Isn't that insane? So it really does matter who you're working with, and it matters who you're getting your information from. You know, someone telling you that absolutely not can you sell 2 houses and buy a new house at the same time. Yeah, you can. It's just a little footwork and planning ahead of time.
Yeah.
Great one.
Let's do it.
That's good.
Right?
It's a really good one, yeah.
Kristie?
I'm trying. This whole time I've been trying to think of a specific story, but I do have a repeated theme that I think I love working on and working with, and these are really focusing very heavily this year on off market. And in our area, we're in Sonoma County, we do not follow something called clear cooperation. So for anyone listening, there are many areas of the country who do follow clear cooperation, and it depends on your MLS and how it's owned. But in our area, we do not follow that rule. So
What is that rule?
that rule would be marketing before a property is open to the public. So within a 24-hour period of marketing open to the public. So since we don't follow that, we have a lot of buyers and sellers who want to remain private in their search or in their sale. So I think it's really powerful. You have a lot of success stories. I'm trying to think of one that stands out, but I can't think of a specific one. There's buyers and sellers who really love that space where it's a less stressful environment. There are a lot of homes available that maybe they're not ready to just go days on market and start counting, launch a property, do a big splash, tell all their neighbors, hey, we're listing. So there's other ways in which to do this that I think, as this panel has discussed now numerous times, there's creativity around this. And we like that part of our job where we can help people in a quieter manner or really meet people where they're at instead of, jumping in with, as you mentioned, Dan, just the uncomfort of, hey, can I afford this? Hey, let's quietly take a look. Why don't we quietly speak with a lender? You don't have to make a big splash, and helping families and couples either downsize or upgrade a home or in a quieter, more comfortable manner. I mean, and I love it too. I think I'm a little more comfortable in that space too, like just being a little stealthier and a little under the radar and trying to help people where I can in a subtle manner.
I keep hearing this theme, as you guys have talked, and it really is, I think it's a testament to each one of you, but you clearly care about your clients and knowing what type of client they are, right? Whether they're wanting to get something on the market or maybe they're quieter, knowing what they need too, and being a coach for them. I don't think a lot of people realize that when they engage with a realtor, and being a coach and helping them through all of those situations from an educational standpoint too. So thank you so much for sharing.
There's a huge customer service aspect to what we do, and also you do too. And it's real unfortunate that both of our industries have maybe not earned themselves the highest and best reputation. Because it's really, really sad. Because
what are you talking about? Wall Street?
I don't even trust my own financial advisor because I'm such a real estate guy. So I can only imagine someone on the street trying to trust me. So kind of kudos back to you for doing the same. That's what I'm trying to say.
Thank you. Mary, a success story.
Yeah, I think, to echo that first, I think that this is a hard industry to be in because people just assume that you're going to go on vacation and cash your check. That is this weird, really, I can't figure out why, because I don't know.
True.
It really,
people say that all the time.
Yeah.
Mm-hmm.
And then, I think it prohibits us from sharing things we're actually doing in our personal lives because, right? Like that's the connotation. It's like, sure, you're on vacation.
We do that a vape.
Cashing your check. Yeah. So it's really a bummer. I do think there are people that might
deserve that.
You're saying people are judging your lifestyle outside of your real estate work because they think that you're not working? Is that what you're saying?
Yeah.
Unavailable,
Being
don't have
unavailable
time.
is not allowed.
Yes.
We've all lost
That's
clients
like
because we're
the
on vacation.
perception.
Correct. There's just generally, I think there's a terrible realtor reputation that we make way too much money. Am I right? On deals with doing minimal work. I think it's such a bizarre thing that we have to constantly be battling because, I mean, I don't even know all these people very closely, but you can tell from all of their experiences, the way that they care, like there is 110% going into the clients. But it's not the reputation we get. It's very strange. Anyway, so I think what I like to bring to the table is the constant relationships that I'm building. Number one, this is a full-time job for realtors. So if you are a part-time realtor or your cousin or aunt or somebody just got licensed and you're going to leave your current, someone, you just have someone that just got licensed. We all just got licensed at some point. So I understand trying to build something, but experience and relationships in this industry means everything, really everything. And if you have built a bad reputation and you've burned some bridges with other realtors or you've walked from deals at the last minute, knowing you were going to walk from a deal. I mean, I've just seen so many things. So I think one thing is that I specifically, I work so hard on maintaining these really good relationships so my clients have the best benefit. So that's just like a blanket statement. The fun aspect is that I also really love design. So when my clients maybe their house is a little outdated and they need to sell it for as top dollars we can get, but also can't afford like a full blown makeover and a high-end designer to come in. I love going in and helping them get their house prepped with as minimal as we can do, but really you get your bang for your buck and all of a sudden their investment looks a lot different for that closing price. Yeah. That's awesome.
Miguel?
Story. All right. I have so many that I love, getting 150,000 above list price on a property that 25% more. But I think one that really liked was going up against David and Goliath. So I was going to go show property to some clients. And right before I went to go show it, I looked on the MLS to see if anything popped out. So we had a schedule of houses. And the houses that they were looking for in their price range, it was like 300,000. This is back right at the foreclosure era. It was a 2,000 square foot. That's probably about what they could get for that price. And this one came out, it was like 3,000 square foot, brand new, 5 years old, but it was completely gutted. So I showed them the property, I showed them this house, and I'm just like going crazy, like, oh my God, we could do an FHA renovation loan. And they're like, what the hell is that? I was like, you could put 3.5% down. The bank will lend you money to pay for the renovations and you'll get instant equity. And they're looking at, and the wife's looking at me like, Miguel, you're crazy. I'm like, what do you guys want to do? You guys want to try? And they're like, sure, let's try. So called up the agent. Hey, Tony, we're submitting an offer. My clients, they had one kid. They weren't going to have any more. Hey, Tony, like, they really want the property, love the area. They want to grow a big family here. This is a perfect house for them. This is like a 4-bedroom, 3,000 square foot home. And I'm like, we already got pre-approved through Wells Fargo. Here's our pre-approval. And we have another pre-approval through Bank of America, because back then, whatever bank foreclosed on a property wanted you to use their bank,
Right.
as pre-approved by their bank. You didn't have to use them, which was like, I believe, illegal, but in order to make an offer, you had to do it. So throw it in. I'm like, oh yeah, Tony. And I just sent the pre-approval through Brenda. She's like, Brenda? No, not Brenda. I'm like, well, no, I've done it. Like, I'll get back to you. It's like, I'd advise you to use somebody else. I'm like, no, I'll call her, email her. I'll get it to you. 3 hours later, I called up Tony. Hey, Tony, check your email. He's like, what's going on? I check your email. Why? I was like, just check it. I can't believe it. In the 20 years I work with Brenda, I have never, ever had her send a pre-approval this quick. And Tony, that's how it's going to be. I'm gonna send emails, send text messages, and call them and make this happen. I've done so many of these renovation loans. I'm an expert in them. I hadn't done one. And and here's an offer. And then Tony goes, he's like, well, you are like $5,000 higher than the cash offer. We were like 3.5% down, 45-day escrow, cash offer, 10-day close. I'm like, Tony, this is why they came out with these loans. This is to help people. This is a family. They're going to grow here. They're going to grow old here. And this company's just going to buy it and sell it and make a profit. He's like, you guys are higher. And we got it. And then I sold it 2 years later for $250,000 more. It's like, you just have to negotiate. You have to see what the seller's situation is and then just work off of that.
I think we're going to walk off on that story. I don't know that I can top that. So if you've watched this far, thank you so much. I hope that you've gotten some real talk about what's really happening, at least locally in Sonoma and Napa County and Marin County. You can contact any of these realtors, your favorite realtors. They like to talk. They like phone calls, as you can tell. We're here over an hour.
You're here to help.
All 6 of these fine folks, you can find their contact information in the show notes. If this is your first time checking out the episode, we are Sonoma Wealth Advisors, financial advisor in Sonoma, holistic financial advisor. Shelby's an advisor. I've said advisor 3 times. You can learn about us at sonomawealth.com. You can also subscribe to our channel. There are many more episodes. Thank you all so much for being here today.
Thank you so much.
Thank you.
This content was produced by Fermata Advisors, LLC, an SEC-registered investment advisor. DBA, Sonoma Wealth Advisors. The opinions expressed by Fermata Advisors, LLC on this show are their own. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Viewers and listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.